Hi, welcome to the market alert for Monday the 23rd of March 2015. And starting off with the 5-minute chart, you can see we've got the new lines, psychological lines and indicators on there from Friday's market alert. And if you haven't seen Friday's market alert about the new PTI indicator, the psychological trading indicator, then do take a look. You'll also find it in the training video section in the member section of the website as well. One thing I forgot to mention on Friday when I was recording the video, and that's the trading times with the PTI. It's slightly different than the PTPs and triple X's where we just let the market trade all the way through. With the PTIs you really don't want to do that, because as you see here in the shaded area, we have the market just hugging the psychological line there. And this is what the market tends to do once the market becomes quiet, i.e. the traders go off to have lunch or the market's waiting for news. So you get a lot of signals around these sort of magnetic lines. So where the market's moving, that's fine. Within the first couple of hours, prices tend to move really well. For the next 2 hours, they tend to be sideways, although prices did break out here. And then later on in the session we can see the market trading back once more, and then just before the close trading back a bit further there as well, coming back down to where or less 50% retracement of the market activity. So the trading times, if we just have a quick look, these are only existing at the moment because of the time difference between the UK and the US. But the market opens at 1:30, 13:30 at the moment, and then what I do is after 15:30, where you can see here, ignore any PTIs, and then at the moment it's 1800 hours when the market generally gets going again, until 2000 of course, which is when it's closing at the moment. After this weekend, when we move on to BST times, then of course everything will revert back to normal, so it'll be 2:30 to 4:30 and then 7 until 9, but I will remind you of that in next week's market alert. So that's something you need to adjust in the primary trade times there. And you will also need to in the PTI indicators, I just move to those, make sure that you've got hide PTIs outside of primary trade times as well, so that they don't actually appear. If I remove this, you will see another few inside of the time that you really don't want to be trading the market, and there you can see why this is applied to the price chart. And again, just to reiterate, it's because the market goes quiet, the traders have a break, and after the first sort of hours of frenetic trading and moving the market in one direction, prices do become a lot more quiet and a lot less volatile, which is why you're seeing this here. So on Friday we had just the one signal there, which went on to trade 20 pips or points, as they're known on the Dow, trading up to the psychological level of 18,150. The market going through a bit more. It didn't come back down towards the entry price, and eventually traded up towards the 18,200 level there, but didn't quite make it. But a good 20 points in this trade here during Friday. Again, we see the importance of having the psychological lines. You can see they're being broken, stopping here, and then the market coming up, then driving through, stopping here, and then coming back. Notice also these minor lines as well. You'll see the market trading to these and holding as well. So see how it's gone through there, coming back, holding, and all the way through again there, coming back through. It's just quite amazing when you actually look at the detail of how these markets actually hold. And again here, coming back down to a minor psychological level, retracing 50%, stopping, and then coming back down as well. So again, amazing things, these psychological levels in the Dow. And like I say, there's a lot more to come on this. I'm just currently working on it as well, and finding ways that we can actually get into the trade a lot quicker in these areas. But it's the amount of time that it's taking me at the moment just to put all of this together. But there are there's a lot more in the pipeline. Right, in the daily chart, fairly quiet day for Friday. Market up slightly today as well, above the 76% we've had drawn in there for the last few trading sessions as well. So driving through on Friday, but then failing to hold. But this morning the market's opened and already driven through it. So it needs to continue through this and then up towards the all-time high there, which you can see at 18,280. I have no doubts this is on the cards either, so expect the market to move in this direction. On the news front, the only really major thing today is Draghi is going to be speaking at 2 p.m, half an hour after the Dow has opened. Of course, the Greeks and the Germans are meeting today to discuss the Greek debt, and obviously nobody really knows what's going to happen. I would imagine a deal will be done at some point. The last thing Merkel wants is Greece to leave the euro, because this will it may encourage the French, the Spanish and the Portuguese and the Italians to think about leaving as well, which of course they have the same sort of levels of debt, also known affectionately as the pigs within the euro. So that's the news for today, and then the implied volatility. Let's just have a quick look at this, see what the market did on Friday. We're down at 10.93, heading back into that very comfortable area where the market sees no risk, and that's when the risk appears, of course. Again, we need the blue line to drop off markedly down below the 10% range. So at the moment it looks rather bullish for the market, the long side being the better side, as it heads back towards that all-time high of 18,280 that we have at the moment. Right, that's it for me for this morning. I will see you in tomorrow's edition of the Market Alert. As ever, thank you for your support, very much appreciated. And as ever, thanks for watching. See you in the next one.